Hi there, and a warm welcome to another special conversation on the squirrels.in. With us today, someone who keeps a very close eye on whatever happens in the space of automobiles. Vinkesh Gulati, Executive Body Member of FADA, Federation of Automobile Dealers Association, joining us live today. Warm welcome on our platform, Vinkesh.
Thank you very much. Thanks for having me.
Vinkesh, across the board, whether you look at legacy media or social media, there is only one question which is being asked today out of the Finance Minister. How can there be a tax on a loss? This proposal, which has been mooted by the Finance Ministry, by the GST Council, that let there be a tax on used cars being sold at a depreciated value. Can you just help us understand, firstly, what, in your opinion, could be a rationale behind this?
See, Mr. Bhupen, first let's understand what is a used car business and how is it actually taxed. See, when a customer sells a vehicle which he has bought new to another customer, so this doesn't come into any GST bracket because it's a direct customer to customer sale. But if that customer sells that vehicle to an organized player who is registered in GST and registered with MORTH as a used car dealer, then the customer gets the money. And when that organized player sells it to another customer, then this GST triggers, which means he has to pay GST on the added value of difference or what is his profit is. And why was this created? Was because when I buy a vehicle from a customer at maybe ₹1,00,000, I then get it dented, painted, and maybe service done, maybe refurb it, everything. And then whatever expense I do, I get an input of GST on those expenses. So if I bought a vehicle on 1,00,000, I did a expense of 20,000 where I've earned maybe 3,600 of GST. Then I sell it at a profit of 50,000. So on that 50,000, the government wants us to pay GST, which was there already before. What has happened before? The electric vehicles weren't in so much discussion when the GST was launched. So nobody bothered about that, and the taxes was there. So sub 4 meter was 12% and more than 4 meter was 18%. What government did today is remove those bracket of sub 4 meter and 4 meter, and they've done it to 18%. So whatever an organized player who is registered adds the value, he'll have to pay 18% of the GST on the only addition of the value. And it could be electric vehicle, it could be a petrol vehicle, diesel vehicle, or CNG. So this is actually what has happened today.
But help me understand this, because I was closely looking at the press release, at the press conference which was done by Nirmala Sitharaman. The new EVs right now, if you buy a new EV, there's a 5% GST rate, right?
Yeah, you're right.
Now, the reclassification under this 18% slab for used EVs, are we saying if I buy a new EV, I'm under 5% GST, but if I buy a second-hand EV, I'm under 18% GST? How does this add up?
So this actually doesn't add up if I see on the, as you are saying. But if I break it down, so a used EV when bought from a customer is already paid the GST on that, whatever 5% when he paid when he bought new vehicle. And now if I buy a used EV and then refurb it, means change the battery or change something, see the additional value is being charged 18%. So it's actually not the full EV which I have bought as a used car being sold as a used car being charged the tax. The 5% tax is on the total price of the new EV. But the 18% tax is the difference what we have made. And actually this government wants to tax whatever additional registered player is earning. What the problem as an organization or as a system what we are looking at, which means if these are taxed, this market is already very unorganized. So if there are 100 used car dealers in market or a used car two-wheeler sellers in the market, there are already only 20% of them registered with MORTH or GST. 80% work under the radar where they buy a vehicle from a customer and sell it to another customer, but they are not doing any official sales. So no GST is being paid. With a higher GST as of today, this gap will increase, which means people will want to move out of that gambit where they are taxed. And obviously, this tax comes from the customer's pocket only. Because if I am adding 20,000 and I'm earning 50,000, I'll overcharge that vehicle by the GST, which is the 18%, which in turn is not a good thing. And in turn, it is increasing the difference between a registered and a non-registered person, which means motivating people to not being organized or getting registered, which is a wrong thing for a system.
So essentially, Vinkesh, what you pointing out? Let's look at a car wale, car dekho, and all kinds of other digital companies which have opened up, and maybe these companies are doing huge volume business because obviously in India the second-hand car market has also witnessed a huge boom. Am I understanding that what could potentially happen is this: that these companies which are trying to come into some kind of an organized mechanism may actually now look at this move as a detrimental mechanism, and therefore they may end up taking steps back from the desire of organizing themselves?
You're right at that level. If I talk about Spinny, Car Dekho, and Car Wale and all that, because they are too big, they cannot move out of that GST ambit where they are registered. They'll continue, but obviously their profit will reduce because the end customer will want to buy a vehicle which is competitive in the market. So obviously to match that, they will have to, one point means lose some money, which is if they are earning profit at 1%, they'll have to lose, or they'll have to overcharge the customer. Then obviously they'll have less customers. So that's a business case where there is a problem. What I'm saying will be a detrimental or a non-motivation too will be the small players which were thinking of getting organized themselves, getting registered at MORTH for as a used car dealer and becoming organized. Now they'll be, I'll not say forced to, but they'll be demotivated to join this organized bracket and continue to be in a non-organized way. And the problem is not only taxes, the problem is legality of the issue. As a customer, if somebody comes to maybe in a neighborhood store where he gives, I want to sell this vehicle. Normally, as a process, that vehicle is kept for a week at that counter to find a new customer to sell. He doesn't pay anything, but it becomes a mediator. And in that week, that vehicle can be misused to anything. It could be legal, it could be crime, it could be anything, because it is a case of trust. But the person in between, is he trustable or not? That every customer can't understand. But if he is an organized player, as a system, he has to be registered in MORTH and GST, which means once he takes a vehicle from somebody, temporarily ownership becomes to him because he then files in MORTH website that this vehicle has come into us. So for that time when he keeps the vehicle, every legal liability comes for that. Now, because of this GST issue, he'll not want to become an organized player or come registered. So these issues will increase. So the people who are thinking of getting organized, getting registered, may get demotivated to register themselves and then create a process where illegal activities or other activities can be motivated.
Just how big is this used car market, Vinkesh? Because I'm trying to understand again, from the government standpoint, the government is obviously looking to shore up its revenues. If I was to ask you, since you are from this sector, what is the number? I mean, how much money is really coming into the government's coffers, or how much trade is really happening in this used car business?
So normally, because it's unorganized, so there is no
official data,
authenticated data. But officially, if I talk about Western countries, the used car market is 3 times the new car market. In India, what data we have come from all these surveys and all, it is around 1.5 to 1.75, which means if we sell around 3.5 lakh vehicles every month, I'm talking about cars, it means around 4.5 lakh cars are being changing hand in used car markets. And if I go to the official sources where authorized data, which is being in the market where authorized players are playing, I feel it's just below 1 lakh vehicle. So basically, you're talking of 3.5 to 4 lakh vehicles changing hand in India as used car, but not coming into the GST ambit or the MORTH official record ambit, which is huge practically.
Okay. So in a nutshell, if an individual is selling his or her car to an individual, there is no problem, there is no change.
No problem, no GST, nothing.
Right. But if you are buying from an organization and that organization has added some value to that used car, that's where your cost of acquisition of that car now goes up.
Yeah. So basically, when you are buying a vehicle from, like you said, an authorized player, you can understand that you have already paid some GST on whatever is added.
Yeah. Okay. All right, Vinkesh. Thanks so much. Thanks so much for joining us and
Thank you very
giving
much.
all
Thanks,
those.
sir. Thank you.